You know, if yesterday's big dip in the stock market has you concerned about your 401k balance and retirement fund, well, it doesn't have to. Tom Jacobs from Jacobs Financial Services joins us to show how you can keep your money safe. Hi, Tom. How are you?
Good morning. I'm great.
Harder nest egg that I've been putting away in my 401k doesn't look so hot. These are uncertain times.
These are really uncertain times. Here's the deal. We enjoyed the longest bull run in the history of the world. People are realizing the markets don't go up forever. We are now seeing momentum to the downside. It's going to get worse before it gets better. Don't do nothing. That's what most people are doing. They're just kind of frozen. They're paralyzed. That's the biggest mistake you can make. So let's talk about this. Dave Ramsey talks about how to get out of debt and the debt snowball. The first thing, if you're in a bunch of debt, stop spending. Okay. When the market's going down, the first thing you need to do is get out. Stop the bleeding. It's going to get worse before it gets better. Inflation is out of control. The war is still going. The price of gas. We're going to see $10 gasoline. Listen, I'm not ringing the warning bells. I am beating the warning. But guys, take your money, get it out of the market, put it in a spot where it's 100% safe. Now, I'm not talking to folks that are 20 and 30 and 40. I'm talking to folks that are approaching retirement. If you're already retired, you may not have time to get the money back if you lose it. So let's stop the bleeding today.
Yeah, we're told, you know, when you're younger, 20, 30, 40, that, you know, there are ups and downs in the market. If you ride that out, generally it goes up over the decades and you're going to make money back. But if you're 50, 55, 60,
bingo,
that time might not be there.
As we get older, we need to take less risk simply because we have less time to recover.
Right. And so let's talk a little bit about where that safe space is, which is fixed index annuities, right?
That's my favorite product, is a fixed index annuity. And I like that product simply because you can never, ever, never, never lose your money. Floor of zero. Market keeps going down, your account stays exactly the same. But if the markets start picking back up, which they're going to, we just don't know when. When the markets go up, you get to go up with them. You're not going to get all of the up. That's one of the catches. But you're 100% safe during these crazy volatile times.
Yeah, you don't have to worry about not having the money or it going away. You know, that brings up a point. Some people with their 401k, they're looking at their balance now. Over the past month, it's been kind of rough. And they're thinking to themselves, am I going to have enough to last the whole time through? I don't want to outlive my money. Can you outlive your money with a fixed index annuity?
Well, fixed index annuities can do lots of different things. One of the things is they can create a guaranteed income that will last forever, and you can't outlive your money. So it's so important to have a plan, and we offer what we call the Jacobs Retirement Roadmap, where we'll map out your retirement, look at all the different moving parts, Social Security, pensions, tax strategy. But right now, guys, it's just so important to keep your precious, important retirement money safe.
Yeah, and that is exactly that's your catchphrase.
That's what we do.
Keep your money safe, where you can't lose it. You talk about transferring this money over. Is there a cost to this? I mean, when you take something out of your 401k, people are afraid they're going to take a big hit.
Well, a lot of people don't have the ability to move the money from their current employer 401k. However, if you've gotten to the age of 59 and a half, you can do something called an in-service distribution. I'm still employed, but now I can take that 401k, I can do a rollover. And to your question, no taxes, no fee, no penalty. You're just moving the money from your right pocket to your left pocket. And we do the in-service, we take it out of your 401k, we roll it into an IRA. The advantages of now having the money in your own IRA is now you can invest it anywhere you want, maybe a fixed indexed annuity.
So that's one of the key factors there is when it's in the 401k, someone else, you've limited options on what's happening with your money. It's usually mutual funds, isn't it?
Exactly. So every employer plan is different as far as the investment options, but almost 100% of the time, the only choice is mutual funds. Whereas if you move it out of the 401k into an IRA, now you can put it wherever you want. So if you have money with previous employers that you're no longer working, at any age you can roll it out. Your current employer, typically you've got to be 59 and a half or separate from service from that employer.
I want to clarify that. If you have an old 401k, instead of rolling it over into an IRA or rolling it over into your new 401k, you can, without penalty, take that money and put it into this.
Exactly right. As long as you're no longer working there at any age, you can roll the money out of that former employer's plan into your own IRA. No taxes, no penalty, no fee for you to do that.
Perfect. Of course, if Penny want to get a hold of you, how can we do that?
Just give us a call, 616-622-4654. Our website, jacobsfs.com. Let's get together. Let's take a look at what's cooking in your portfolio, see what we can do to help you.
Tom wants to help keep your money safe. Why don't you pick up the phone now? If you have even if you have just simple questions, they're there waiting for you. 616-622-4654. 4654. If you want to get on the net and do a little deeper dive, jacobsfs.com. Don't forget locations in Granville, Norton Shores, and Kalamazoo. We'll be right back.